Hi guys, welcome back. Anthony Allen, your mortgage broker, and we are continuing the first home buyer series. This segment is based on conduct. The banks are always watching your conduct. So whether it be a rental property, you're currently in rent, make sure that your payments are on time. Make sure that they are the actual amount. Make sure that you're not in arrears in any way whatsoever. I've seen clients that the amount for rent has gone up by $5 a month, and they've been behind $5, and then the next month $10, and the next month $15, and it's taken them 5 or 6 months to actually rectify that. If you find that when you actually buy your house and then you want to use your property, your rental ledger in lieu of genuine savings for any reason or whatever, then you're going to find that the bank is probably going to decline your request based on your conduct alone. So yeah, that's something to bear in mind. The other thing that you should be looking at for sure is your conduct on your transaction accounts, your savings accounts. I've seen far too many times that clients are trying to save that much money, and they're doing it in the right ethos, that basically they're leaving the transaction account so low that they've only got cents in there, and they get an unexpected bill once every couple of months or something is brought forward and the payment is out of time with what they're expecting, and suddenly they're overdrawn. And it's something that the bank will always ask questions about, because they'll always say, well, they're not in control, that the applicant is not in control of their finances. Look, it's not a deal breaker, but if a deal is on a knife edge, then that could be the difference to actually create a decline. So look, it's just something to bear in mind, more than anything, and just something you don't need to create obstacles for yourself. In the same vein, always make sure that your credit cards don't exceed their limit. If they do exceed their limit and it's a one-off, make sure that you've paid them. Don't wait until, if you found out that it is over limit, don't wait for the statement to come. Make sure that it's paid immediately. Always make sure that your car loans and your, any other debts or liabilities that you've got are always paid on time. What else? What else is it to consider? Living expenses. Living expenses is massive. Maybe I should discuss living expenses in a separate topic, a separate segment. But yeah, I mean, I've mentioned living expenses in savings. If your living expenses are high, the bank will potentially forensically go through your bank statements, and if they find that you're spending $3,000 a month, and you're only declaring $1,800 a month, or you're a family and you're spending $5,000 and you're only declaring $4,000, then the difference, the extra difference that's going to make, or the extra cost, the extra liability, is going to seriously impair your borrowing capacity. You won't believe how much it's going to reduce your borrowing capacity. So to that extent, it's a good thing for just to prepare for your loan. Make sure that you've cut down your insurance payments. You've cut down that Disney or the Amazon Prime that you're not using. That you've cut down on the data that you're not using on your internet or on your phone. You've looked at your car insurance and you've renegotiated that. You've looked at your health insurance and you've reduced all the cover that you're not actually using. You know what I'm saying? Just basically don't, cut out all the spend that you don't need. take lunches to work rather than always buying it. You've basically just got to stack the deck in your favor, and make sure that if your deal is on a knife edge, that you give the banks a reason to give you an approval rather than a decline. Good luck. Take care.